Hi everyone, welcome to the values. Today we're looking at Cazoo. This is a stock worth watching. I think it's potentially in the midst of turning around a business. It's had an abysmal time on the market. Like if we look at a year ago, the stock was $9.30. Today it's at 31 cents. Basically knock off that $9, which is insane. And basically we've got a market cap of $236 million, whereas previously this company was in several billion dollars of valuation, which is pretty insane to see it drop that much. So basically these guys are in the business of selling cars online and delivering it to your doorstep, and they kind of think that they can get this working in a really good way. If you look at the results, they are making some really good progress. Firstly, they offer a really good price for the car. They make sure they do it up to, or at least repair it to, a really good quality, and then they deliver it to the buyer basically. And they think as if they can keep doing this and they can get about 3% market share in the UK, potentially they can make as much as $500 million in profit. So you can kind of see where that potential is. But for now, they're not close to the profit situation yet. They are making a loss. So the thing is, we need to just go, how much more before this company actually breaks even and stops burning so much cash? The problem with the company was, in the past, it would just burn so much cash. It was in the UK, it was in another 4 countries in Europe, and it was just aggressively expanding, and it was spending so much on marketing, and it kind of helped them grow quick, but not enough to kind of cover the expenses. And then now they're forced to cut as much expenses as possible, and that basically means they just kept the UK business and have closed everything else. And so far they look like they're doing a really good job. So Q3, their sales was £347 million. That's up 103% on last year, and that's the kind of number that you kind of see. That's if they can keep that up for next year and kind of grow it at, probably they won't grow it at that same number. They don't even think they can double it next year, but they think it's going to be a high number, so it could be 70 to 80%. And that will be really good. That will probably enable them to break even, especially given that the balance sheet shows that they have £308 million in cash and over $150 million of self-funded inventory. So you get the idea that they've got the cash, they've got the inventory, and they just need to continue to execute as they are, because the consumers kind of love what they're doing, but they kind of want a company that they trust, and over time when they build their brand, which they are, that's gonna continue to grow. As they say here, continue progress towards reaching profitability without the need for further external funding. And they think they can do this if they can basically double their revenues. So potentially middle of next year or end of next year, we could see them break even. And I think the minute the market sees that, the market's gonna love everything about the stock. So potentially it's probably too early to get into the stock now, but it's worth watching it. And then basically once they release some good results heading into the right direction, everyone's going to look into the stock and are going to start buying it up in a big way. But of course, high risk, because if their strategy does not succeed, they burn all their cash, then potentially the company is in trouble. So you need to know what the risk and the reward is on this kind of company. If they do in a matter of fact do break even, build a sustainable business, then they can continue to grow, and then that's when they make some really impressive profits. Like, the problem with this kind of company is their gross margin is 3%, which is really low. That it's still higher than the prior quarter of 0.9%. and the prior quarter of that is 1.1%. So they've done a lot of cost cutting, which has enabled them to make a 3% gross profit. So they kind of, in a sense, work for nearly peanuts, right? They don't earn a lot, but their hope is if they do so much volume, they're going to earn a good profit, basically. Their current sales for the year will probably go over $1 billion. So in terms of volume, they are doing the massive volume required. They just need to do even more volume than they are doing right now, which is very, very much achievable. If they manage to cut even more costs and improve their gross margin, that's going to do them even more wonders and get them closer to break even as well. So there's a lot of things that they could potentially do to kind of get to that break even point. But of course they want to continue to spend a bit more to make sure they're continuing to get that customer awareness. Though in their point of view, the last 3 years, that's what it's been about. It's been building that brand, building that awareness, and then now it is just continuing what they are doing, and then basically work towards that break-even point and potentially even that profitability point, which is when a lot of people are going to love this stock once it reaches that point. I think COVID was kind of that situation that probably didn't help these guys, but now they're probably gonna basically they're still in the right direction. Like, given that they sold cars online, you would probably think COVID probably would have helped them, but maybe not on the logistics point of view or setting up kind of that growth phase for the company. It's hard to tell entirely, but if we look at the quarters, in terms of vehicles sold, the main focus is really retail. Like, wholesale is them buying cars, then realizing it's not what they wanted, and then just kind of flicking it off again. So retail in this quarter was 18,889 vehicles. Prior quarter was 15,700, and the prior quarter to that is 12,000. So you can see they're kind of jumping up in nice 3,000 increases for units of cars sold, which is pretty good, because basically if they can continue that 3,000, then they're on a good trajectory to grow this business in a nice way. And I think, that's what you're looking for. So potentially this is a stock that could potentially produce a massive gain given how much the stock has fallen. The stock's fallen to a price that is so low that basically they just have to do something great to basically maintain the business and keep it sustainable, and then the market's going to really jump into the stock because their idea is really, really good. And yeah, basically if they can continue to do what they're doing, they can reach some pretty big profits and the stock's going to do well. If you've got any questions or comments, post below. Until then, good luck investing, everyone.